Welcome to Sawyer Silver Value. Something just happened in the crypto market, and most people have no idea how serious it really is. You turn on your phone this morning, you see Bitcoin is down. You think, okay, another red day. Maybe you even shrug it off. But what if I told you that beneath the surface, a silent storm has been building for weeks, and it finally broke last night in a way that caught even some of the smartest hedge fund managers completely off guard? This is not just a dip, this is not just the usual crypto volatility. This is a moment where the entire structure of the market is being tested, and the next few hours could determine whether we see a violent rebound back towards 70,000, or a cascade that takes us all the way down to levels nobody wants to talk about. Stay with me, because by the end of this update, you will understand exactly why the whales are moving right now, what the Fed isn't telling you, and the one level on the chart that could trigger either a short squeeze of historic proportions or a complete collapse of retail confidence. Let's start with the numbers. In the last 24 hours, Bitcoin fell sharply, breaking through several psychological floors that traders thought would hold. We are now trading in the mid-$60,000 range, specifically around $64,800 as of this recording. That represents a drop of nearly 8% from the weekly high, and more importantly, it marks the lowest point we have seen since early May. But the price alone does not tell the full story. The real pain is in the liquidations. Over $300 million in leverage positions were wiped out across the crypto market in just a single hour last night. Most of those were long positions, traders who were betting that Bitcoin would hold 67,000. They were wrong, and they paid the price. The fear in the market is now palpable. The Crypto Fear and Greed Index, which just last week was flashing extreme greed at 78, has now plunged into fear territory at 42. That is the fastest one-week drop we have seen since the FTX collapse. And here is where it gets interesting. The selling did not come from retail. Retail is actually panic buying the dip in small amounts, according to on-chain data. The selling came from something far more concerning: institutional outflows. Let me say that again. The big money, the ETFs, the spot Bitcoin funds that everyone celebrated as the holy grail of adoption, they have seen 3 consecutive days of net outflows. Leading the pack is the Grayscale Bitcoin Trust, which bled over $150 million in a single session. The new BlackRock and Fidelity ETFs are not immune either. Their inflow momentum has stalled completely. This tells us that the institutional crowd, the same ones who pushed Bitcoin from 40,000 to 73,000, are now hitting the sell button. Why? That is the million-dollar question. And the answer involves 2 letters, F and OMO, not the good kind. The fear of missing out has flipped to the fear of larger losses. But there is a deeper reason, and it connects directly to what just happened in the stock market and the bond market. Yesterday's stronger than expected ISM manufacturing data threw a wrench into the Federal Reserve's softening narrative. Suddenly, the market is pricing in only one rate cut for the entire year, maybe none. The 10-year Treasury yield spiked to 4.6%, and when bond yields go up, risk assets like Bitcoin tend to go down. The big institutions are rotating out of crypto and back into yield-bearing assets. That is not a theory. That is what the order book data is showing. But do not think for a second that this is a simple cause and effect. There is something else lurking in the shadows. Over the last 72 hours, a series of massive Bitcoin transfers from unknown wallets to exchanges has been detected by on-chain analysts. These are not normal movements. We are talking about wallets that have been dormant for over 3 years, suddenly waking up and sending millions of dollars worth of Bitcoin to Binance and Coinbase. Historical patterns show that when old large wallets move coins to exchanges, it often precedes more selling. The question is, who are these whales? Are they early miners taking profits? Are they a single entity unwinding a position? Or could this be related to the ongoing regulatory pressure from the SEC, which just yesterday sent another round of subpoenas to crypto firms regarding Ethereum? The uncertainty is thick enough to cut with a knife. Now let's talk about the chart, because this is where the suspense really builds. The key support level everyone is watching is $65,000. We have already dipped slightly below it, but the real line in the sand is $60,000. That is the level where the largest cluster of buy orders sits, according to the order book data from multiple exchanges. If Bitcoin loses 60,000, the next major support does not exist until 52,000. Yes, you heard that right. There is a liquidity vacuum between 60,000 and 52,000. That means if the selling pressure continues, we could see a cascade of stop losses triggering, margin calls compounding, and a drop that happens faster than any news alert can keep up with. On the other side, the resistance is now at 68,000. That level has rejected Bitcoin 3 times in the last 2 weeks. Breaking above it would require a massive shift in sentiment, likely driven by either a dovish Fed comment or a surprise announcement of a major corporation buying Bitcoin. No such catalyst is on the immediate calendar. But here is where the story gets a twist. The open interest in Bitcoin futures is still historically high, even after the liquidations. That means there is still a massive powder keg of speculative leverage in the system. If the price suddenly reverses and spikes upward, those same institutions that are short or sitting on the sidelines could be forced to buy back in a hurry. That is the setup for a short squeeze. And while it sounds like a long shot right now, remember that Bitcoin has a habit of doing the exact opposite of what the majority expects. The social media sentiment is overwhelmingly bearish tonight. That is often a contrarian signal. The smart money knows that the best buying opportunities come when retail is crying. On the geopolitical front, tensions in the Middle East have not helped. Oil prices are up, and any spike in energy costs adds to inflation fears, which makes the Fed even less likely to cut rates. Add to that the upcoming US presidential election and the uncertainty around the regulatory stance of a potential new administration, and you have a recipe for jittery markets across the board. Bitcoin is no longer trading in a vacuum. It is correlated with tech stocks, with gold, with the dollar index. And right now, all of those correlations are pointing in a dangerous direction. What should you do as a viewer? That is not for me to tell you. But I will say this. The volatility you are seeing is not a bug. It is a feature. This is the price of admission for an asset that can go from 65,000 to 100,000 or to 40,000 faster than any central bank can react. The key is to watch the next 12 hours of trading in Asian markets. If Asia wakes up and starts buying, we could see a reclaim of 65,000. If they sell into this weakness, we are heading for a test of 62,000 by tomorrow morning. Set your alerts. Watch the ETF flow data when it releases at 8 a.m. Eastern. That will be the first real signal of whether institutions are done selling or just getting started. And one more thing. There is a rumor circulating among crypto hedge fund managers that a large European pension fund is preparing to allocate a small percentage to Bitcoin. If that rumor turns into an actual announcement, it could change everything instantly. That is the nature of this market. It is equal parts data and narrative, math and emotion. Right now, the math looks shaky, but the narrative could flip on a dime. You have made it this far into the update, which means you are part of the small minority of traders who actually seek the full picture rather than just the price tag. That is why I go deep. That is why we do not just give you headlines. We give you the context, the on-chain data, the order book dynamics, and the macroeconomic forces that are quietly shaping the next big move. Do not let the fear of the moment steal your clarity. Markets are messy, but patterns repeat. And the pattern right now is that Bitcoin is at a decision point. Either the dip gets bought aggressively or the dip turns into a deeper correction. The next support level is not a game, it is a cliff. For more amazing videos like this, subscribe to our channel, Sawyer Silver Value News.